In Washington, Federal Reserve policymakers met for the first day of a two-day meeting. An interest rate hike is not expected to be announced tomorrow, but many are looking for details on the central bank's plan to pare back its bond holdings. Steve Liesman takes a look at what else Wall Street is looking for.
The CNBC Fed survey for September showing no change expected in rates at the end of this meeting here. Rates, 100% of our 42 respondents expecting rates to remain unchanged after the meeting and the announcement tomorrow. The third rate hike, though, 76% do believe there will be another quarter-point hike before the end of the year. That's a little bit higher than market prices might suggest. And finally, the balance sheet, 68% say by October, the Federal Reserve will begin to reduce that $4.5 trillion balance sheet. As for the outlook for rates, they have come down compared, for example, from our March survey. The same for 2017, but look what happened for 2018. Down by 0.3%, down by 0.2 for 2019 to 2.5%. The long run rate, though, we're going to watch that tomorrow to see if Fed officials are bringing down their estimate for how far they have to go in this rate cycle. As for their expectations for the balance sheet, it's expected to go down from $4.5 trillion down to $2.4 trillion. But don't get too excited. Some people are explaining this to watching paint dry. It's going to take 4.4 years to get there. We also asked an interesting question here, which is how low can the unemployment rate go before it sparks inflation? 3.7%. That's pretty much below the 4% level and the 4.3% or 4.4% level where we are right now. So there's room to run, according to these respondents, before inflation is sparked. But note this, 45% say there is little or no connection of the unemployment rate to inflation. For Nightly Business Report, I'm Steve Liesman.